Alright, yes guys, welcome back to another video. I'm going to be showing you how I made 8R in a matter of 2 days. I'm going to show you guys step by step what I'm looking for, what time periods I'm looking for these setups, and what exactly needs to be seen in order to take these setups. What sessions are we actually trading now? The New York Open, which happens at 9:30 AM New York local time. So if you're in the UK like myself, that'll be 2:30 PM. And then you'll be trading until the end of the PM macro. So I trade till the end of the PM session. So that would be till 2:15 PM New York local time, which for me in the UK is 7:15 PM. I trade until 9:30 AM to 2:15. But sometimes if we're not finding a trade throughout the day and it is quite slow, then I'll just set some alerts and I won't bother looking at the charts until I see something of interest. Otherwise, there's no point just sitting at your desk. You may as well get on with some other stuff, like edit some videos, or if you gotta go and do some other business apart from trading, then that's a perfect opportunity to be doing that. Macro entries are obviously an added confluence. What you do see happen sometimes is that in between the macros, price will just be consolidating, or it'll be making its move to a certain point of liquidity. Now, this is exactly why we used to trade the macros, is because they're the highest probability, time zones for where these trades occur and where they play out really, really nicely. But there are lots of times where outside of macro, a trade will algorithmically play out perfectly. So just trading the full session completely eliminates the fact that you missed those trades. And if a trade presents itself, then it's valid to take. So you basically will never miss a setup that's within your set of rules, if that makes sense. Now, what sweeps do I look for? I look for 15-minute highs and lows to get swept. So for me personally, I don't need to see a 15-minute swing high or swing low get swept, but I'll definitely prefer a swing point. However, if it's clear where price is drawing to and it sweeps like an internal 15-minute low, so it's not quite a swing low, but it's an internal point, then I'll also count that too. There's many times where I've taken trades and it's delivered absolutely perfect off a 15-minute internal low, say instead of a premium. And also session liquidity. So that's your highest probability liquidity. So we're talking London highs, Asia highs, New York lows, lunch highs, lunch lows, etc. So that's your session liquidity. And also I look for continuations out of gaps. So if you're looking at the 5 and 50-minute time frame, if price is trading out of those points, say a bearish gap or a bullish gap, then you can take a continuation to the upside. So one of the recent trades I took from last week was price trading out of a 5-minute bullish gap, and then I took we had a shift in market structure, fair value gap, and just before we took all-time highs, I took longs because we didn't technically take that point of buy side off a bullish order block, and it delivered absolutely perfectly for a 2R. Literally top ticked the market, and it dropped to like 400 points. So holy top tick. Trade management. How are we managing the trades now? I still use the same system as usual, but I also do use a system of trailing based off the R multiple. So if you're going for a 3R trade, then every single R that you make, you trail to those points. So if it hits a 1R, you trail aggressively. Hits a 2R, you go break even. And if it hits a 3R, then obviously you let the trade play out for a 3R. I don't like to be so systematic anymore in terms of the way I trail. I look at the scenario. That's why it says 2 different scenarios. I'm looking at the first scenario where if I'm looking at price and I think something's going to happen, and it's like a bad scenario. So there's a high probable chance that price is going to run to my stop loss after we take this swing high, then I will trail aggressively. Yeah. So I wouldn't obviously do it based off emotion. I would go based off what I'm seeing. And if that's what I think is going to happen, then I'm going to trail. There's no point leaving an open risk if you think something's going to happen and then it happens and you've just lost more money than you really should have. But then also, when you're going for bigger positions, you don't want to trail too aggressive. Going based off R multiple is the correct decision, because then you're giving price enough chance and breathing room to actually play out, work off the imbalances and the order blocks and all these PD arrays that play in favor for the trade to actually work out. If they're getting disrespected, then obviously, hopefully there'll be points below it or above it, depending if you're long or short, for price to work off. If there isn't, then you'd potentially just be leaving a completely open risk, or you would have trailed aggressively by then for when you've hit that 1R. So those are 2 different scenarios. You either use the same system where you trail at the first short-term high because you believe something's going to happen, or you believe that's the most appropriate way of managing this position, or you use the point of trailing based off R multiple, and if you feel like that's the correct decision for the trade, then go for it. Now, you're probably wondering, well, how do I know? Looking at what you're seeing, so if you understand price action, then you'll know. But it's kind of hard to teach it to you unless you've been in the Discord watching me trade every day, or you've stuck around long enough to know the way that I trade and what I'm basically seeing and looking for. Yeah. Okay, so this was on Thursday, the 21st of May, and this was when we were coming into the New York AM session. So we're actually inside of the first day of macro too. And what we can see here is we have a clear sweep of buy side liquidity. Is this a 15-minute swing high? There we have it, no doubt about it. That's a sweep of buy side liquidity. And we're also trading out of a 15-minute bearish gap. So two lovely confluences to support looking for shorts. All right, so now what can we see here? We've got a sweep of buy side, and we've also swept the most recent short-term high. So if we got a shift lower market structure now, this would be an absolutely beautiful unicorn model to look for shorts. Okay, so we can see here we have a clear shift in market structure on NQ, clear shift in market structure on the S&P 500. Now what are we looking for? We're looking for a bullish order block to get inversed. Where can we see it? On ES right here. This bullish order block gets inversed. And what's it paired with? It's paired with the fair value gap on ES. We have a clear shift on NQ, and we have that bearish gap that's been presented. And you can see that NQ has actually filled this bearish gap. So this would have been your entry. Your stop placement would be at the recent swing high. Sometimes now with my stop placements too, I'm actually putting at two previous swing highs. If the RR is good enough, so let's say, you've got it at this recent swing high and your 2R is just here, for the benefit of having more room and not getting faked out where price takes out the recent swing high and goes lower, I run my stop loss just a bit higher to be safer and have it in a bear position. And then I'll look for a 2R at the opposing draw and liquidity, which is clear price is going to go and draw to hit anyway. Because in the first AM session too, especially in that first day of macro, when price has offered a super buy side, clear shift in market structure, it's offered the model perfectly, 9 times out of 10, it's going to go to that draw if the model does play out. So let's see how this runs. In this scenario here, we can see we have this swing low on NQ. That's 50% of the range between our entry point and TP. So once price takes this point, I would be going break even. All right, there we go. So 100% risk free now. So now I'll be looking for price to take profit. All right, there we go. So price trades out of the 1 minute bearish gap to the left. And there we go, TP smashed. Absolutely perfect. Textbook ICT silver bullet model. Okay, so after price hit TP on NQ, we can see that price has rallied up to the upside. And if we go on the 15-minute time frame, we can see that we're trading out of that 15-minute bearish gap again, and ES has taken out a 15-minute swing high. So this is a clear sweep of buy side liquidity, and we're trading out of a bearish gap. So two confluences again to be looking for shorts. We've clearly taken out this recent short-term high. So we have a shift in market structure on the S&P 500 through this swing low, and we have a shift in market structure on NQ through this swing low. Now, whereas our inverse order block on ES, we have this one right here to the left that is paired with the fair value gap. This model right here is valid for shorts. All right, there we go. So right there, we'd be in for shorts, and I'd run my stop loss just at this recent swing high, and then my TP for a 2R. Okay, so once price takes out this first swing low, I definitely would not want to see price return back to this fair value gap. I'd want to see an acceleration lower. There isn't really much for price to work out of. If it does return, we just have the bearish fair value gap, which has already been filled based off our entry. So I'm going to trail my stop loss just above the swing high. Bang, and there we go. 2R smashed. That candle aggression was crazy. I remember seeing it at the time. Absolutely spot on entry, spot on execution, and that is exactly what we do every single week. If you go back on the channel, you'll be able to see me take this trade live. Absolute banger. So 15-minute time frame, we got a clear sweep of buy side liquidity is actually London highs. So that is our session sweep, and then we can see that we've clearly swept out the most recent swing high. And then where is our shift in market structure? Here's our shift on NQ. This is our shift on ES. So here's how I was able to get an absolutely spot on entry at 29618. ES at the time didn't actually shift market structure. It didn't close just below the displacement just yet. So this is something new that I've also implemented. If the model is there and ES hasn't quite shifted and there's a model to take, I will take the trade. But if ES then fails to shift on the next candle, I will close out that position. But if ES then also does shift in the next candle, then I'll stay in and I have a better entry. And if ES fails to shift, it's more than likely price is still at break even anyway. So it's completely fine. So that's my way of not letting trades run without me just because ES has not shifted yet. Okay, cool. So I've got my stop placement and TP at the ready. Now, how am I going to trail this position? I'm going to go based off the New York Open, that's where I'm going to go break even 100%. That's a sweep of liquidity of the sell side that I'll definitely be looking at, and I would take a position if price was to say have swept this point and I was looking for longs. So 100% New York open low. If it takes that point, I'm going break even. Okay, so we can see as of now, price trades back up to take out this short-term high and trades into this bearish gap. So we'll see if price respects these points and moves lower. There we go. So that is the volatility we were looking for to the downside. NQ takes out 1, 2 swing lows. So I'm trading my stop loss just above this short-term high. And there we go. So NQ takes out this break-even point, which is the New York open low, and I really wanted to just see price run through this area and not return, because there's a very high chance that price would tap into a high time frame imbalance to the left, which is likely a 5 or 15, and react out of this New York open low. So I'm completely break even here. Okay, so we're getting very close to TP here. Now what I didn't do was trail my stop loss to this recent high. I had my eyes on this bearish fair value gap up here. It was a POI, a point of interest for me, that price may potentially tap into and then come down lower. And to be honest, I'd rather just get taken out of break even than get taken out at this point. I mean, you're that close to TP, I'm going to be pissed off anyway. Well, not really pissed off, but I'd rather give price the chance to work out of the imbalances and draw lower than get taken out early and miss out on profits. So you can see there, price perfectly to the tick, taps this bearish fair value gap and works lower, and you'll see we smash TP just like that. And that is why I did not trail to this high. I trailed to the high of this fair value gap, so slightly in a profit. So I wouldn't have got completely out of break even, but basically break even, and that's what I've done for that position right there. Alright, so we're in the PM session now. I didn't take any more trades throughout the day. I wanted to wait for the PM just because I didn't like the way price was kind of chopping around in this range here. So I waited for price to sweep up on a buy side, which we can see here. Price came up and swept this point. And now I have a more confident idea of understanding of where price is likely going to draw to coming into the PM. What I know from the PM macro is that when it offers a model coming into the session of the macro is absolutely beautiful. The delivery is out of this world. We've got a shift lower market structure on NQ. We've got a shift lower on ES. Where's our bullish order block? We can see it's right here on the S&P 500. It's paired with that fair value gap. We've got a fair value gap on NQ. We'll look for an entry off that point. Bang, there we go. So we're short on NQ. Running my stop loss at this short-term high, and then my TP for a 1 to 2. I'm going to see how price reacts. If it puts in a swing high when we trade out of this gap, then once it takes the swing low, I'll trail to the recent swing high. Then once we take out this swing low right here, I'd 100% be break even. Cool, so we can see here, NQ has taken out the first swing low, and what's it put in? A swing high. So we're going to trail stops to this recent short-term high. Now, there we go. Didn't even have to worry about break even. I mean, when we trail to that point, you practically are break even, but perfectly ticked our TP to the point, and 3 minutes we hit TP on that for a 2R. So those were the 4 executions I took on the 21st and the 22nd of May that was able to secure me 8R in profit. And I took all of these live on the Discord. If you do want to see me take these executions, all the details will be down below. You can either go directly to the website to purchase either just a monthly if you want to see what it's like for a month, or lifetime. There's also a purchase for one-to-one mentorship, which will give you free access to the live streams anyway, and it's all lifetime as well. There's no additional fees after that. And if you do want to just get inside for free, and you're not looking to join but you just want to get inside of the community, there's the free Discord there below as well, where you're able to contact me too. So I hope you guys have enjoyed this video. If you did, make sure to drop a like, subscribe, and use code ASH10 as well at Alpha Futures if you are grabbing some eval. Send me a screenshot. My Instagram is down below too, or on Discord, or if you're using the code, and you'll be entered into a giveaway. I do a giveaway once every like 3 weeks or 2 weeks, so pretty much monthly giveaways out for you guys to win. So I hope you guys have enjoyed, and I'll catch you in the next one. Peace.